Everything is up. YTD Cash is worst performing asset. Hello all. Heavy cash holders including me missed a lot of gains this year so far. SP 500, Nasdaq, precious metals, bonds and even crypto are all up. YTD. Personally, I transitioned to cautiously bull in March because bears ran out of catalysts that will break the market. Market shook off bad earnings, recent Fed hike and regional bank crisis. CPI data next week will probably show continuing decline in inflation. Fed is almost done hiking, probably 0 or 1 more hike. Bonds market is expecting massive rate cuts. A recession expectation went up last month but market kept rising. Q2 earnings will likely not be great but less than feared and market will probably shake it off. Bears were expecting a market flush and capitulation but it will likely never happen as long as many investors are cash heavy and have jobs. I considered waiting until May, after earnings, and start buying regardless of the prices. If you have not bought already, what is the signal you are waiting for to start buying? Disclaimer: I am currently 60 cash, 40 stocks. My ultimate plan is to reach 60 stocks and 40 cash by end of year. Always remember that dead people have the best performing portfolios. Yes, P is up. YTD, but the ATH is over a year ago. Not too late to miss the bull run or crash as soon as you reinvest. Small caps are not up. Just to play devil's advocate, I'd argue commercial real estate, car loan, and credit shoes haven't dropped yet. And if core inflation continues on its current path, they will. My 1,300 shares are not up, sir. The yields spread between risk-free and stock earnings are like nil. Historically it should be 3.5 points. It's like closer to 1 point or worse since earnings are just coming in for Q1. Last time it was around 2007. So, man shrugging, more downside risk than upside. Unless earnings can buck expectations and surprise to upside. Earnings aren't up, the gains are entirely from multiple expansion and slightly lower long-term yields. I'm confused. Based on your post, why are you holding so much cash and continue planning to hold 40 cash? My IRA that had existed prior to the current crash is still down 8%. I started TCA and opening a couple new positions in my investment account but in cautious numbers. Also learned a lot about bonds and dividend stocks because I don't want to be cash heavy earning nothing. I'll continue down this path to build a nice base. We have not reached our last ATHs and I don't think we will for a while. Everything is up probably due to seasonality, since markets are actively traded from August-May. Hence the expression sell in May and go away, where the market usually goes down over the summer. This is a really weird post and it seems like you're trying to sucker retail traders and not make a genuine analysis. I could be wrong but you're trying to tell cash-heavy investors to buy when you yourself are cash-heavy, in before May, one of the worst seasons for the market. Lost all our dollar end of 22. I'm all cash, doing well, expecting another big leg down. If there isn't one, that's fine. I would rather risk being wrong as a bear neutral in these conditions than risk being wrong as a bull. Nothing tells me that shit is looking good other than a YTD chart. I'll get back in when inflation gets back down around 2. Do you count CDs as cash? I think of them more as a bond asset, but it pretty much is a cash equivalent. If you're not buying into the market consistently in small chunks, you should be. It's much less stressful than trying to figure out if we are in a bull or bear market, when the low point will be, etc. Just set aside a reasonable amount every time you get paid and buy in. Doesn't matter if it's 1 share or 100, just always be buying. If you insist on holding cash, use something like a preferred stock ETF or a bond fund so you can at least be collecting a dividend while you hold, and not be as subject to the volatility of the market. It's up YTD because we had a big tip in December for whatever reason, at least possible tax loss selling. Then buyers started coming back. Judging anything like this over a few months and what is essentially just a coincidence is meaningless. Unless you are on Reddit. Small cap growth isn't up. My fund is having a wonderful year and we're YTD Cash, man shrugging. Don't bother trying to time the market if you want to build wealth. The market will turn when people expect it the least. You want to be invested when that happens. Are you joking? Plain up, dude. This garbage is not doing anything. Best play I've made all year, maybe of all time, has been Goog. I sold all my underperforming stocks, some at a loss. Bought Goog stock, and $110 call options for May-June when it was $87. Today you couldn't wipe the smile off my face. Damn, it feels good to finally do something right. We went from 380 to 410, but we nearly dropped to where we started. Your post is timely and correct now, but we're in a channel and we can easily drop past 380 and continue the bear market trend and be down year to date. No one knows what's going to happen. Unless you took out your profits already from beginning of the year, does it even matter? But Tehi Sarash is sioming. Sell in May and go away. Is teaching you to DCA into inflated valuations so they can rug pull. If you're gonna be long, for God's sakes, learn how to play with hedges. Here's a simple one, MSFD with SQQQ. This is my choice and I've made money every day regardless of direction. But learn about SQQQ before buying, requires daily consideration. I also like a long bond ETF as a hedge. Having long equities without a hedge right now is very dangerous. Close your eyes to last year's downtrend. This gets said all the time, and yet people don't listen. Be fearful when others are greedy, be greedy when others are fearful. I'm getting 5 on my cash, so it's not all bad. Great time to go into cash then, right? You're supposed to buy low and sell high, friends. Personally, I'm waiting for the market to actually reflect some of the recent catalysts, banking crisis etc. I recently went all cash because figured why not, everything is still out of control whether the market wants to admit it or not. So now, it's only daily swing plays if I feel like it, otherwise, all cash. LOL, just wait. There's a debt ceiling battle along with a major recession on the horizon. My portfolio is not up. Start adding bonds as well. For now. I pretty much break even from last year when I put all my money in. 3-month T-bills. Guaranteed and high yield. For now. Everything is up from its lows? How is that possible? Thoughtful face. Tongue fart noises. This is why I just DCA and not think too hard. If you're still waiting, you missed the buzz. I'm up 25 this year, you fucked up man. Time in the market, timing the market. I don't believe it for a second. People were saying mission accomplished and all is fine right before the previous crashes too. Human psychology is terrible at predicting when a catastrophe is over, because our perception tends to compare with the recent past. I'll feel more confident about the market when the rates start coming down again or when the geopolitical tension fades away and we get a globalized economy again. I'm gonna wait until the market runs up 50 from today, then crashes 20, then congratulate myself on how smart I was by buying the dip. I'm 60 ETF stocks and 40 cash, but now increasing ETF stocks. No point expecting the worst. Dividends alone for 2 years got me back 6 of losses in tax-free cash tax-sheltered account. Time in market really does beat timing the market. PS will still keep like 25-30 cash for those juicy drops. Solar stocks are not up. Except for First Solar. For some unfathomable reason that sucker never goes down. Guess which one I didn't buy? Dollar good still down 20. Big money is trying to pull cash hoarders into the market. Everything is down in the past year. Cash has been the best performing asset. Time in better than timing.